Welcome back to Roxom TV. I'm your host, Jamie. We've got a packed show for you today covering some of the biggest stories in geopolitics, artificial intelligence, Bitcoin, robotics, and global markets. We are talking about the US and Iran, China's AI ambition, university education, robotics, or Bitcoin. The underlying theme is quite the same though, which is the world is changing incredibly fast and the investors are trying to figure out what the future might look like. So first, we'll start with the story driving markets right now. The US and Iran peace deal. Markets have been celebrating, stocks are rallying, oil prices have been falling, and investors are treating this as a major geopolitical breakthrough. But here's the question we should be asking today. What exactly did Iran agree to? Because once you move beyond the headlines, there are still tons of unanswered questions. We will break down the controversy surrounding the reported $300 billion reconstruction package, what happens to Iran's uranium stockpile, whether sanctions will be lifted, and why even some U.S. lawmakers seem unsure about what was actually agreed to. In short, the market is celebrating peace, but are we celebrating too early? Then we shift to China, where Bloomberg is reporting that Beijing is preparing a massive $295 billion AI infrastructure build out. This isn't some ChatGPT or chatbot story. This is a national strategy story. China wants to build one of the largest AI computing networks on Earth. So, whether it's data centers, power infrastructure, domestic AI chips, and a computing system designed to reduce reliance on American technology. The AI race is no longer just about who has the smartest model. It is becoming a race for data centers, electricity, semiconductors, and compute, and China clearly does not want to be left behind. Speaking of AI, we also look at a fascinating story coming out of China's education system. Chinese universities have reportedly eliminated or suspended more than 12,000 degree programs over the past 5 years. So 12,000. Many of those cuts are happening in fields like art, humanities, foreign languages, and management. At the same time, schools are adding more AI, robotics, and technology focused programs. So we'll ask a bigger question. If AI is changing the workforce this quickly, what should students actually be studying to get today? And are universities around the world prepared for what's coming next? Then I want to show you one of the strangest videos I've seen this week. So there is a massive phone farm. So rows and rows of smartphones automatically scrolling, liking, swiping, and watching videos all day long. At first, of course, it looks funny, but once you actually think about it, it raises a pretty uncomfortable question. How much of what we see online is actually real? If robots are generating engagement, algorithms are promoting that engagement, and humans are reacting to it, then who is influencing who? That is a conversation about social media, AI, and the future of attention economy that I think you'll find it very interesting. We'll also talk about a growing battle between Washington and the AI industry. Reports suggest the White House is investigating concerns that a China-linked group might have gained access to one of Anthropic's most advanced AI systems. This is currently no public evidence that happened though, but the story highlights something important. AI is increasingly being treated like a national security asset, very similar to semiconductors. And the question is no longer just who builds the best AI. It's becoming who controls access to it. Then we'll discuss one of the biggest funding rounds in robotics this year. German robotics company, so NEURA Robotics, just raised up to $1.4 billion at a $9 billion valuation. Investors include Amazon, Nvidia, Qualcomm, and surprisingly Tether. But the most interesting part isn't the funding part. It's the idea that future AI agents might eventually need their own economy. That means their own payment rails and perhaps even their own form of money. So could Bitcoin eventually become the money of machines? That sounds very futuristic, but we'll explore why some people think that's exactly where things are heading. And finally, we'll wrap up with SpaceX. So SpaceX is now trading on Roxom, giving Bitcoin holders a new way to gain exposure to one of the most talked about companies in the world. We'll talk about the historic IPO, Elon Musk becoming the world's first trillionaire, and how Bitcoiners can now access SpaceX using Bitcoin directly. Plus, Roxom is giving away one share of SpaceX to one lucky winner, so we'll show you how to enter. And of course, after all of that, we'll finish with some Bitcoin TA and take a look at what could be next for the market. So, in other words, we've got a lot to unpack today, so let's get started with the first story of today. So, over the past few days, markets have been rallying on headlines, rallying hard that the United States and also Iran have reached a peace agreement. So, stocks are going up. So, if we take a look at S&P 500, we are very close to its all-time high. So, the past few days, ever since we touched the 50 EMA, we have been using that as a support line, and we bounced off rather well. And oil is, of course, coming down. Investors are celebrating. But if you actually look at the details, there are still a lot of unanswered questions. In fact, one of the biggest questions right now is very simple. So, what exactly did Iran agree to? Because despite all the headlines, many of the most important parts of the deal are still unclear. So let's start with the number that everyone is throwing around. So being the $300 billion, what the hell is that, right? So report service suggesting Iran could eventually gain access to a reconstruction and investment package worth roughly $300 billion if it complies with the agreement. That immediately sparked controversy. So Donald Trump, that's what he said on Truth Social, he immediately pushed back, saying reports that America would pay around $300 billion were completely false. That technically is true. So according to administration officials, the proposal does not involve direct payments from U.S. taxpayers. Instead, the idea reportedly involves an international investment fund backed by Gulf countries and private capital. In other words, it's less of a cash handout and more of a future investment package tied to Iran following the agreement. But even that remains largely theoretical at this point. Nothing has been confirmed, nothing has been approved yet, so there hasn't been any funding involved, but many of the details are still being negotiated. That's all we know. And there might be another important issue in the entire plan as well. So for years, the biggest concern has been Iran's nuclear program. So Vice President J.D. Vance recently said Iran is agreeing to eliminate its stockpile of enriched uranium. But Iranian officials are describing things very differently. So Iran's foreign minister said any reduction of enriched uranium should happen inside Iran, not through shipments abroad. And that is, of course, a very different distinction between the two countries, because where the uranium goes, how much gets diluted, and who verifies it are all critical parts of any nuclear agreement. Right now, it appears both sides agree changes need to happen, but exactly how those changes happen is still being negotiated. And here's another major sticking point. So reports suggest that the U.S. wants Iran to hold uranium enrichment for as long as 20 years. Iran reportedly wants a much shorter timeline, and somewhere in the middle, negotiators are trying to find a compromise. That difference also matters because a temporary pause is very different from a long-term restriction. And until both sides agree on the timeline, one of the most important parts of the deal remains unsolved. Another big question we have to talk about is, of course, sanctions. So, sanction relief. Can Iran access frozen assets? Will economic sanctions be lifted? Will Iran be allowed back into parts of the global financial system? According to the US officials, no frozen Iranian funds have been released yet, so $0. That is the official position from Washington. However, officials have acknowledged that sanctions relief and economic incentives are part of the broader discussions. So the basic idea appears to be Iran complies first, economic benefits come later, but again, details remain unclear. And even some American lawmakers seem unsure about what exactly was agreed to. So, according to Vice President J.D. Vance, the signed memorandum is only about a page and a half long. That's not a lot of detail. So, there is a possibility, if you think about it, that Iran's understanding of the agreement might be different from the US understanding. And that's something investors should really pay attention to because peace agreements don't fail only when one side breaks the rules. Sometimes they fail because both sides thought they agreed to different things. And there's another hurdle to be coming, which is Congress. Depending on how the final agreement is structured, lawmakers might eventually review parts of the deal. We saw something similar with Obama era, the nuclear agreement back in 2015. So even if negotiators finalize the details, the political debate might be far from over. So I think this is where investors need to stay level-headed. Like there is a lot of excitement, like the market is celebrating peace. That is for sure understandable. Lower geopolitical risk is generally positive for stocks. Lower oil price are positive for inflation, and fewer military tensions are good for global markets. But let's be honest, we are still very early. The framework has not been announced. The framework has been announced. The details are still being negotiated. The signing process is still ongoing, and some of the most important questions remain unanswered. So, what happens to Iran's uranium? How much sanctions relief will be granted? What exactly is the $300 billion investment package? And perhaps most importantly, do both sides actually agree on the same deal? Because until those questions are answered, investors should properly view this as progress toward peace, not peace itself. So that is my take for the situation between US and Iran. But we have to move on to the second news of the day. So we have to talk about AI for sure, and particularly speaking, AI in China. So while many investors are focused on OpenAI, Anthropic, and Silicon Valley, China is quietly preparing one of the biggest AI infrastructure projects in the world. So according to Bloomberg, Beijing is considering a plan to spend roughly $295 billion over the next 5 years to build a nationwide AI and data center network. And honestly, this isn't just another tech story. This is a geopolitical story. This is an infrastructure story, and it could become one of the most important AI developments of the decade. So, what China is building. So the plan is reportedly centered around building a massive network of interconnected data centers across China. So think of it like a national AI highway system. Instead of having competing power scatter across different regions, China wants to connect everything together into one large network. So the goal is quite simple, which is to give businesses, researchers, startups, and government agencies easier access to the computing power needed to train and run AI models. Because in the AI race, compute is becoming just as important as talent. So here's the part that really stands out in the news. So according to the report, China wants at least 80% of the technology used in the project to come from domestic suppliers. So that means companies like Huawei could become major benefits here. So as it also means less reliance on American technology. So remember, the US has spent years restricting China's access to advanced AI chips. China's response appears to be quite straightforward, which is to build its own AI ecosystem, build its own chips, build its own infrastructure, and reduce dependence on foreign supplies. So I know when people hear AI race, they usually think of just like ChatGPT, or the LM, Claude, Gemini, DeepSeek. But I have to say, the real battle might be happening beneath the surface. So what I mean is data center or power generation, semiconductor, networking infrastructure. These are the things that actually make AI possible. And that's why governments around the world are increasingly treating AI infrastructure as a strategic national asset, very similar to roads, ports, or energy grids or military infrastructure. Now, going back to the number $295 billion, like obviously that's a huge amount of money. But interestingly, if you compare that to the US, it's still smaller than like some of the American companies they are spending. So if we take a look at this chart here, of course, it is skyrocketing because we're talking about the US companies at the end of the day. So we have Amazon, Google, Meta, Microsoft, how much money they are spending on the AI, basically AI infrastructure. And they are investing hundreds of billions of dollars into AI infrastructure this year alone. The difference is that in the United States, much of that spending comes from private companies, whereas in China, we increasingly like seeing the government play a leading role. That is a very different model, but both countries are ultimately moving in the same direction, which is to build more compute, to have more AI infrastructure, and build it as fast as possible. What's even more interesting is that the reported $295 billion only covers part of the project. So, according to Bloomberg, China is also looking at integrating power infrastructure into the AI rollout because AI doesn't just need chips, it needs electricity. A lot of electricity I'm talking about, by the way. Some estimates suggest total investment could eventually exceed $700 billion if energy infrastructure is included. That's approaching the scale of some of the largest national infrastructure projects in modern history. So I think the biggest takeaway here is this. So the whole AI race is no longer just about who has the smartest model. It's becoming a race for infrastructure, like who has the most data centers, who has the most energy, who has the best chips, and who can build the largest computing network. Because in the future, AI might become as important to economic growth as electricity was in the industrial age. And China clearly doesn't want to depend on anyone else to power that future. Whether this plan ultimately succeeds or not, one thing is becoming very clear. The global AI competition is accelerating, and both Washington and Beijing are now treating AI as a matter of national strategy. All right, so that is a wrap up for the China story, but we will take a short break from here. When we come back, of course, we're not going away. We have more AI story of the day because it is, as I mentioned, it is becoming a very important technology in this modern age. So don't go away. We'll be right back with more details.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Alright guys, welcome back to Roxom TV and thanks for sticking around with us after the break. We now have to talk about, well, we're sticking into the whole AI realm in China. China is making one of the biggest education changes we have seen in years. So according to government data, Chinese universities have eliminated or at least suspended more than 12,000 degree programs over the past 5 years. At the same time, they've also added more than 10,000 new programs. So, in other words, roughly 1/3 of all university majors in China have been changed. And the reason is very simple. Of course, it has something to do with AI, because AI is changing the job market faster than universities can keep up. So many of the programs being cut are usually in areas like arts, humanities, languages, and management. These are fields that many policymakers now view as oversupplied or less aligned with where the economy is heading. Meanwhile, universities are adding more programs focused on AI, robotics, data science, and advanced technology. For example, several universities have launched new majors focused on embodied intelligence. That's the field that combines AI with physical machines like robots, and that fits directly into China's the whole broader goal of becoming a leader in robotics and next generation AI. Not to mention, there are different challenges China is facing internally. One, of course, being the unemployment rate. So, China is producing record numbers of university graduates every single year, but many young people are struggling to find jobs. Young unemployment rates remain a major challenge, and universities are facing increasing pressure to prove that their degrees actually lead to careers. One example is coming from a university in Shanghai. So, the school recently stopped accepting students into its product design program. Well, that's because graduates were having a harder time finding a job. According to one former student, AI can now perform many of the tasks that product designers used to spend hours of doing so. So things like modeling, rendering, or visual design can increasingly be done by AI tools these days. And this trend isn't limited to engineering. So China's there's a very famous school. So Communication University has also been reconstructing some of its film and media programs. One graduate explained that the media industry today looks completely different from when he studied there. So a decade ago, students were training for traditional television. Today, content creation revolves around live stream or short videos, social media, and AI powered production tools. The skills employers want are changing, and universities are being forced to adapt. But does this automatically solve all the problems? Because that is what we're trying to ask here. So, some education experts argue that simply replacing one major with another might not solve the problem. Technology is moving so quickly that today's hot degree could become outdated in just a few years. But think about it, many of the programs now being eliminated were only introduced relatively recently. So if universities consistently basically chasing the hype and chasing the trend, they might always be one step behind. Some researchers are now arguing for a more flexible system. So instead of focusing or forcing students into one specific major, maybe give them more freedom to build their own combination of skills. Because the reality is that future careers might not fit neatly into one category anymore. And honestly, this isn't only happening in China only. We're seeing similar debates around the world. So universities everywhere are trying to answer the same question. How do you prepare students for jobs that might not even exist yet? Like AI is changing software development, it's also changing design, of course, it's changing marketing or media and finance, basically all the industries you could think of. And nobody knows exactly what the workforce will look like 10 years from now. I think I think for here the biggest takeaway is that we are moving away from the old career model. So for decades, the formula was quite straightforward. So you choose a major, you get a job in that field, stay there for most of your career, that, well, it is disappearing. So today, success might depend less on one specific degree and more on adaptability. So the ability to learn new skills, the ability to work with AI, and the ability to reinvent yourself as technology changes. China's decision to cut 12,000 degrees, it might sound very dramatic, but it might also be an early sign of what higher education around the world will eventually have to face in the age of AI. So China is, of course, a very big player in the AI world. But guess what? They're also very big on robotics, so on robots, so humanoid robots. So there's a video I want to show you. It's making a lot of noise online, particularly on X. And honestly, when I first watched that video, it's a little unsettling. So at first glance, it looks like a warehouse full of smartphones. So let me play it right now. So it looks like a warehouse full of smartphones, but if you look closer, every phone here is constantly tapping, like scrolling, liking videos, watching content over and over again. So what you are seeing appears to be a massive phone farm. So rows and rows of devices running around the clock. The phones appear to be connected to Chinese language software and social media platforms. And while we cannot independently verify who exactly is operating this setup, phone farms like these have been documented for years across parts of Asia and around the world. So the purpose here is quite simple, which is to generate views, generate likes, and fake engagement, and in some cases, help content appear more popular than it really is. So people are looking at this and they say, like, what? Like fake followers have existed for years. Like, what are you talking about, Jamie? This is not new. Well, that is true. But I think the bigger issue is what this says about the internet we are using today. Social media platforms have spent years building systems designed to keep people engaged. So, likes or views, notifications or comments, like every one of these things trigger a response in our brains. We see engagement and assume people care. We see millions of views and assume something is important. We see a post going viral and assume it must be popular. But what if some of that engagement isn't coming from people at all? Because think about it. If machines are generating views and algorithms are promoting content based on those views, then human might end up reacting to signals that were never been real to begin with. A video gets boosted because robots watched it. Humans see the higher view count and assume that matters. So more people click, the algorithm pushes even further, and boom, suddenly something appears like to be very popular, not because people cared, but because a machine gave it a head start. So for years, we have treated engagement as a measure of success. So more likes of a video. But in a world where engagement can be manufactured, those numbers start meaning less. Popularity no longer proves people care. Sometimes it simply proves somebody found a way to game the system. And that's becoming increasingly important as AI gets more sophisticated. So today we have the phone farms tomorrow we have AI agents, or maybe not tomorrow, but today as well. So AI creating content, AI liking content, AI sharing content, and eventually AI influencing what other AI systems choose to promote. And at that point, we might have situations where machines are generating large amounts of the activity that shapes what humans see online. So I think what I'm asking here is quite philosophical. Like social media was originally supposed to connect people, but what happens if a growing share of the interactions aren't actually coming from human? What happens when humans become addicted to basically social validation that's increasingly being generated by robots? Because if machines are creating engagement and algorithms amplifying that engagement, and humans are treating it as reality, then eventually the internet risks becoming a giant hall of mirrors where robots are talking to robots, algorithms are reacting to algorithms, and humans are left trying to figure out what's real or what isn't. Let me know if this is the beginning of Black Mirror episode. It is inevitable. We are moving towards that direction, or there's something we could do right now in this day and age. But anyways, we are taking a short break from here. When we come back, of course, we are still talking about AI because like there is I know there's a huge segment that I'm talking about AI these days, but it's getting so important and all the liquidity got sucked into the AI sector. So that's why we're spending more time here. Let me know your feedback if you like the AI segment. Basically, let me know everything in the comment section below. But anyways, we'll take a short break from here. And after, we're going to give you the details you need to know.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. So for years, the conversation around AI was mostly about technology, who has the smartest model, who can build the best chatbot, who can attract the most users. But now the conversation is changing, and increasingly AI is becoming a national security issue. So what happened here is, according to reports, the Trump administration is investigating concerns that a China-linked group might have gained access to Claude Mythos, being one of Anthropic's most advanced AI systems. The concern was serious enough that the White House recently moved to restrict basically access to both Mythos and the related Fable model while officials look into what happened. Now, it's important to be clear here. At this point, there's no public evidence that China successfully obtained the model or any underlying technology. But the fact that the government is investigating tells you how seriously policymakers are taking these systems. So The story became even more interesting this week. So there are more than 50 cybersecurity leaders reportedly urged the administration to reverse the restrictions. So the reason why they do it is because they argue these models are some of the best tools available for finding software vulnerabilities before hackers can exploit them. In other words, limiting access could create a different problem. So the same AI systems that raise security concerns could also, I would say, help improve security, and thus creating a very difficult balancing act of policymakers. Well, I do find it very interesting because whenever there's some latest update from Anthropic that happen to shock the market, so a lot of stocks are being destroyed whenever there's latest update from Anthropic. So whether it is a SaaS company or cybersecurity company, I'm sure a lot of tech firms don't like Anthropic because they are taking the attention away and they are kind of killing the original business. But anyways, Anthropic is scheduled to meet with U.S. officials today as the company works to resolve the dispute. The goal is to potentially restoring access to Fable and also Mythos models. And honestly, this highlights how quickly AI companies are becoming intertwined with government policy. A few years ago, AI startups mostly worried about raising money and launching products. Today, some of them are sitting across the table from government officials discussing national security, and that is a very different world that we're in. What's happening here reminds me a lot of what we have already seen with semiconductors. So, governments no longer view advanced chips as just technology products, they view them as strategic assets, something that affects economic competitiveness, military capacities, and also national power. We are seeing similar thinking emerge around AI. So, as AI systems become more powerful, governments around the world are paying closer attention. We have already seen export controls on advanced chips. We have seen restrictions on semiconductor equipment. We have seen growing competition between the US and China over AI infrastructure. And now we are beginning to see debates about access to AI models themselves. And that might be the next major battleground, if you ask me. So right now we have talked about AI. So far we've talked about AI, but let's shift gears, and I do want to talk about robotics because these two sectors are kind of intertwined together. Like without good AI, the robots are as good as plastic. So as good, maybe just like a toy without the AI. So there's this news I want to go over. One of Europe's biggest AI and robotics companies just raised a massive amount of money. So German Robotics, the company, what's called is NEURA, so NEURA Robotics, have closed a new funding round of up to $1.4 billion, giving the company a valuation of roughly $9 billion. And the list of investors are really impressive. So we are talking Amazon, Nvidia, Qualcomm, the European Investment Bank, and interestingly, we also have Tether on that list. Now, most people probably expected to hear Amazon and Nvidia, but Tether's name on that list definitely caught my attention. So let's go over basically NEURA Robotics. So what this company is about. So Neural is building humanoid robots or industrial robots, what it calls neural first. Yeah, I know that sounds very quite name lame, coming from metaverse and got wrecked by the metaverse world. But the idea here is quite simple, like what Neural first is trying to build. So the company wants to build an ecosystem where robots, AI systems, and machines can work together and share information. So think factories, think warehouses, logistics centers, think robots helping humans perform everyday tasks. And that's the vision they are building toward. And to be fair, this is not something new. Lots of basically factories, they are starting to use humanoid robots and doing all the testing right now. But what's interesting and really caught my eye is Tether's involvement. So Tether is actually not just throwing money around. So not just like, here we go, basically NEURA Robotics, like take my money, and then Tether will just walk away. So the company says it plans to bring its basically the wallet deployment, wallet development kit and AI technology into the NEURA ecosystem. So Tether is also continuing its effort to expand USDT on Bitcoin through a protocol called LGB. The goal is to make digital payments and digital assets work more efficiently on top of Bitcoin's network. So this isn't just a financial investment, it's also a technology partnership. Now, here's where the story gets interesting. So can AI agents have their own money? So if we go back to the post on X that Mark Moss was sharing, so here's his take and how he thinks about the whole situation. So he argues that the real story isn't the robots, it's actually the money. So think about where AI is heading. Today, AI mostly answer questions. Tomorrow, AI agents might start making decisions and completing tasks on their own. Maybe they buy competing power, maybe they purchase data, they might pay another AI agent for its service, maybe they manage some supply chains and negotiate price on your behalf. If that future arrives, you could have millions of AI agents making transactions every hour of every day. And that's where the question becomes, what money will they use? They can't be using some bank account doing transactions, right? Because that is extremely slow. So according to research highlighted by the Bitcoin Policy Institute, advanced AI models often choose Bitcoin when asked what makes good money. And honestly, that shouldn't be quite surprising. So Bitcoin is very global. It is digital. It is available 24/7, and it doesn't require permission from a bank or government to move value across borders. Now, to be clear, we're still talking about a future vision here. AI agents are not running the global economy today, and robots are not out there buying things with Bitcoin. But the idea is worth paying attention to. So, for years, Bitcoin adoption has followed a pretty clear path. First, it was individual investors. Then companies started buying Bitcoin. Then governments and nation states enter the conversation. But what if the next wave isn't people at all? What if it is machines? What if a future AI system simply choose the form of money that works best for them? So no politics, no emotions, no marketing, just software selecting the most efficient options. So we are still a long way from that world. But as AI and robotics continue advancing, it's becoming a question that investors might need to think about sooner rather than later. And another very interesting assumption that people throw out, because last week I did an interview with Andy, so Andy Lean, being a very prominent advisor to governments around the world on digital assets. So I asked him what currency that AI agent would use. I think what he said is very interesting. So he basically saying AI would come up with a new currency that humans never used before. And I think like both scenarios could be possible. It could be Bitcoin, it could be a new form of currency that we have never seen. Like both sound possible to me. So I guess we'll wait and see, and time will tell us what the result going to be. All right, so let's move on to some exciting story, especially for Bitcoin investors. So SpaceX is now available to trade on Roxom. So being our parent company, what it does is that it gives Bitcoin holders a new way to gain exposure to one of the most talked about companies in the world. And the timing couldn't be even bigger because SpaceX is, of course, the largest IPO in market history. Like shares, what actually we go to share price, it was actually priced at $135 and skyrocketed to $192 right now. I checked. So after hours, it even reaching $200. So it's quite crazy. So like valuing the company, like I mean on the IPO day, it valued the company at $1.77 trillion. demand reportedly exceeded available shares by nearly 4 times. When trading began, the stock opened around $150 and quickly moved even higher, pushing SpaceX above a $2 trillion valuation and making Elon Musk the first trillionaire in the world. So for years, SpaceX was one of the most sought after private investments on the planet. Most retail investors simply couldn't get access to the IPO. Like now, not to mention, like we have two the biggest IPOs to come this year, so being OpenAI and Anthropic. Like the idea here is that it is quite unfair that like regular people like you and me, we could just like look at the IPO, couldn't participate, especially the pre-IPO and even IPO. Like some regions are not allowed to do so, but like guess what? Like you can do it on Roxom. So we don't have the pre-IPO for OpenAI or Anthropic yet. But like as for trading or buying some SpaceX share, you could do so. You could like buy some SpaceX with your Bitcoin. It's just like a one-click trade, very easy to do. So you create an account on Roxom Exchange, and then you deposit your BTC. And if you want, so you could buy some SpaceX, or if you're basically bearish on SpaceX, you can do vice versa. And just to celebrate the launch of SpaceX, Roxom is also giving away one share of SpaceX to one lucky winner anywhere in the world. So if for folks who are watching the show right now, so make sure to follow Roxom on X. So not Roxom TV, but Roxom Exchange. So it's very easy. So literally at Roxom. So follow Roxom on X, quote the giveaway post. So this one you're seeing here, and reply to that post. And there you go, boom, you entered the prize draw event. So simple as that. So SpaceX is very exciting, like the most valuable company launch in market history is finally here, and now Bitcoiners can participate as well. So just a quick mention, like if you do want to enter the prize draw, you do need a Roxom account. So make sure you create an account first, and you can use the link in the description box below if you haven't already done so. But anyways, the last segment of today's show, let's quickly hop over to see what Bitcoin is trading at. So like for today's analysis, I do want to start with the monthly. So zooming out to all these cycles of Bitcoin's Bitcoin history, jumping from monthly to weekly. So this basically, this few days is very interesting because like if we zoom closer, we know that Bitcoin skyrocketed. So we had a bottom of like 59K, and then we skyrocketed to quite interesting, so 66K. So that was very impressive. But most of that, it was because like we have some good news between the Iran situation and also between the US. So we have finally come up with some sort of peace agreement, though it haven't been signed yet. But like that is at least the most positive news we have heard so far. So in the coming days is also the FOMC meeting. It will be out in 1 day, so 1.5 days basically. And you will know a lot of people are watching because it's going to be Kevin Walsh first FOMC ever. So I do expect huge volatility to come in the coming days, or maybe even coming hours during Kevin Walsh's speech. Anyways, let's start with the monthly chart to see what Bitcoin is possibly going to, because like a lot of people are asking my take, basically, have we bottomed out yet? Because like the low that we've seen this weekly candle, like a 59K, of course, that hurt a lot of people for sure. A lot of Bitcoin maxi that they would think Bitcoin would go up only. So anyways, I'm using the chart to indicate whether we could like potentially bottom out or not. So what I've done here is that we are on the monthly chart, and I do want to spend some time looking at the monthly hour side at the bottom. So being right here. So what I've done here is that I've connected different cycles. So all the way back from January 2015 to today, so 2026. So I've connected all the dots here. And what I found out is that if I kind of draw a straight line from the bottom, bottom of the hour side of each cycle, and then I kind of form a channel right here. So obviously, zoom out to 2026 and we pay attention to the current market state right now, we haven't dropped to this channel yet. So that means what I'm trying to say is that looks like we are not at the bottom yet. So looks like things could still turn around. And this is basically very much aligned with the 4-year cycle. So 4-year cycle, folks, I'm a big fan. Some people think it's just some of a religious or superstition stuff. But anyways, according to 4-year cycle, we're going to see the cycle bottom in October 2026. And so far, it's kind of aligned to the monthly hour size as well. So here we are looking at the basically T8 instead. So we haven't dropped to as low as this falling channel on the monthly hour side. That means we haven't seen the final capitulation yet. So we could still turn around. So this is just what the monthly is suggesting. And if we go to the weekly chart, so here we have so we're jumping from a higher time frame to a slightly lower time frame. So monthly and weekly, still very long-term mentality we're talking about. So that's why we have to, it's like short-term. If you guys are a opportunity trader, then maybe you want to look at the daily candles or maybe even the hourly or the 5-minute chart. But since majority of us are investing, so I do want to focus on monthly and weekly only for today. So for the weekly, one indicator I found very, very helpful in the past is Ishimoku cloud. So being there are many lines right here, but I'm going to make your life easier. So I'm going to remove the leading span A. I'm also going to remove the cloud field. So what we're going to do is that I just want to focus on the baseline. So being the red line here. This indicator is very helpful. So we could see whenever we get out of the baseline, that happened to follow with basically a massive bull run. So this is, okay, maybe this is not a perfect example due to the COVID situation here. But okay, let me go ahead and close that for now. So if we actually zoom out to, let's say here, so 2020, that was here the indicator was working when we got to the baseline, got out of the baseline. Here as well, so 2023, we got out of the baseline and a huge bull run, a huge bull market to come. So generally speaking, this is a general rule of thumb for me to kind of gauge where the market is possibly going. And you can see apart from the pandemic incident, this indicator has worked exceptionally well. So here we got out of the baseline that was back in September 2015, and boom, that is a massive bull run that took up to the top all the way till late 2017. So we skyrocketed to, so that was the skyrocketed from 250, let's do rough measurement, to $19,000. So that is a crazy gain. So far, the point being is that the baseline is a very it's a indicator that I found is very helpful to possibly gauge where the market is going. So that being said, if we zoom closer to the current state right now, we are nowhere close to the baseline. So this is rule number 1 we have to see. We are not there yet. And if we go back to the monthly chart, it also aligned to the monthly hour side that we simply haven't gone low enough. So the final capitulation, the final leg down is not in yet. We possibly have to see a little bit more pain, maybe for a few more months, and things going to get better in Q4. that is according to the 4-year cycle and also according to the TA that I just did. And not to mention, the coming days is going to be very volatile due to the Kevin Walsh first FOMC. So when we have more updates about the decision that they're making, of course, we're going to break that out on Roxom TV. But personally, I'm not very I don't think much going to change. Despite who is in the Fed chair seat, of course, being the Fed chair, he might have more voting power, maybe more voice in the market. But let's not forget, in the FOMC meeting, there are still 12 different members, so they all get to vote. So Donald Trump wants to lower rate doesn't mean that he could just lower rate. So that's the point. But anyways, we'll keep you guys up to date on Roxom TV. So that's wrap up the entire show that I'm trying to cover. So before you go, make sure to give us a follow on X. So my X is @crypto_io. Make sure to follow Roxom TV as well, because we have regular news coming out on an hourly basis, covering different stuff. So AI, Bitcoin, of course, and geopolitics. So point being, there's so much you probably do not want to miss out. And we have prominent guests, all the experts joining us to share the expertise and the market text. So thank you guys for watching. And as for my live, I'm here Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded versions are also available on both channels. So being Jam Crypto YouTube channel and Roxom TV YouTube channel. Thank you guys for watching, and see you guys in tomorrow's show.